What's up, guys? Joe Chavarria back in action. Today we're going to talk about 4 reasons why your lender hates Credit Karma. I know hate's a strong word, but maybe dislikes with a passion. Why they dislike with a passion Credit Karma. We'll cover that plus more on the new episode of the Joe Credit Show. So let's dive right into the topic at hand. 4 reasons why your lender hates Credit Karma. Reason number 1 is because Credit Karma is only going to provide two of the 3 major credit reporting agencies. And for those that are not familiar with who Credit Karma is, so Credit Karma is basically a third-party provider of credit scores. It's like an app, it's a company, but they also provide, most people know them for their app that they provide consumers where they can get access to your credit report and score, get alerts. They're good for a lot of different things. The score model that they're using, which we'll get into a little bit more, is not the score model that your lender is going to be using, but we'll cover that. That's one of the reasons. We'll cover that here in a bit. But what a lot of people don't understand is that there are 3 major credit reporting agencies. You have Experian, you have Equifax, and you have TransUnion. There's tons of different credit reporting agencies. Those 3 companies I just mentioned, those are like the big 3 or credit bureaus, which, by the way, they give themselves the name bureaus to kind of seem, bureaucratic and government-like, but they're not. They're for-profit companies. They're not, they're not ran by the government. They're not owned by the government. They're not, by the government, for the government, nothing like that. They're for-profit entities. But there's several different reporting agencies that are out there that collect data on you, like LexisNexis, Clarity, CoreLogic, Check Systems, those kind of things. Those are other credit reporting agencies that collect data, and many of them sell to the credit bureaus, and many of them issue reports and sell their own data to other entities that will buy that data. And so Credit Karma does not provide Experian, which is one of the big 3. Again, big 3, Experian, Equifax, TransUnion. So Credit Karma does not provide the Experian data, and therefore the credit scores that you're looking at are only going to be Equifax and TransUnion. And so when you're looking at your credit report, you're looking at your credit scores, and when your lender is going to look at your credit, your application to determine whether or not they can extend credit or extend a loan to you, they're going to look at all 3 bureaus. They may even be looking at Experian only, depending on the lender. For example, mortgage companies, they look at all 3 credit reporting agencies, and they're going to use the middle of the 3 scores to decide whether or not you qualify or pre-qualify for a loan. And so it's so important to know where your credit standing is with all 3 reporting agencies, because the mortgage lender is going to look at all 3 reporting agencies and reports. Some credit card companies go off of Experian only. Some auto dealers go off of like TransUnion and Experian, or Experian and Equifax. So you need to know what's going on with Experian, because it does matter whenever you're trying to apply for credit or a loan, or more importantly, a home loan. So that's one reason why your lender probably hates Credit Karma, because it doesn't provide all 3 reports and scores. It's just 2. The second reason is because the score model that Credit Karma provides is a Vantage score. Mortgage companies, they use FICO score, and they use a certain kind of FICO score called FICO Mortgage. And it's an older version of FICO versions 2, 4, and 5. So also kind of like FICO Classic is what they like to call it. But Credit Karma is using a Vantage 4.0 score model. And so when you go and apply for a mortgage loan, or a credit card, or even an auto loan, the score that you see on Credit Karma is going to be way different from what the lender's actually going to pull. And the reason why is because they're using FICO scoring and Credit Karma is using Vantage scoring. And so why lenders dislike this strongly is because sometimes you can kind of they have to kind of get into a confrontation scenario, like, why are you lying about my score? My score is really this, you're telling me it's this. So there could be a bit of confrontation, but then there's also like an education part you have to go through. And of course, the loan officers, realtors, and anyone in finance, many of them work off commission. So a lot of them don't really have the luxury and the time to explain the difference between Vantage and FICO. But that's a big reason why a lot of lenders dislike Credit Karma, is because the score model that the lenders are using they're using FICO-based scores, whereas Credit Karma is providing Vantage-based scores. Right now, FICO probably issues about 95% of the scores to lenders. So about 95% of the lenders that are out there are using a FICO version. Some are using Vantage, but the majority are using FICO. Vantage has not really been widely adopted by the banking industry or lenders that are out there. FICO has been around since like the 80s. Vantage has been around like early 2000s. And so FICO just has a lot more trust, a lot more reputation than Vantage does. Vantage is a competitor to FICO, but FICO for the most part has been owning this market, more so the lending-based market. Consumer market, Vantage has been doing a great job grabbing consumer attention, obviously using, apps like Credit Karma and credit card companies that provide you your score. Those are going to be typically your Vantage scores. But again, when it comes down to the application, when you're applying for a loan or a line of credit, 9 times or 9.5 times out of 10 lenders you go to, they're going to be using a FICO score. The third reason why lenders, hate Credit Karma is because how the Vantage score that is used in Credit Karma, Vantage 4.0, how Vantage 4.0 scores negative items differently than FICO does. So items like paid collections or items like medical collections, they're weighted a little bit differently under Vantage 4.0. And the reason why they did all of that, because Vantage 4.0 version treats those collection accounts a little bit differently, not so significantly under FICO scoring model. But another reason too is Vantage wanted to, one way to kind of try to grab market share, take market share away from FICO, is under 4.0 and even 3.0. They wanted to do something that FICO was not doing, which is scoring people who are generally not scorable under FICO. So to have a FICO score, you need to have at least one trade line that's been updated within the last 6 months and has been open for about 6 months in order to have a FICO score. With Vantage, that didn't apply there. If you just had a credit profile or if you had an inquiry, Vantage could score you, right? So basically the non-scorable, the non-bankable, which was like 30 million people, now had a credit score through Vantage scoring model, but these are people that were not scorable under FICO. And what people didn't really understand is that these people that are not scorable, they're not really even trying to look for credit, right? They're not even really in the market for credit, maybe a few here and there. And then they find out that they don't have credit or they don't have a credit score, then they go out and build credit and come back later on. They're kind of in the beginning stages. Vantage is like, no, let's give them a score right now. And so, with this 4.0 model, with that going on, plus negative items being treated differently or not scored as significantly different than FICO, as well as trended data being used under 4.0, a lot of lenders just aren't there yet, right? They want a true and accurate picture of the person that's applying for a loan or line of credit to really assess risk. So with all this, people being scored who weren't scored before, people that are have negative accounts, paid collections or medical collections, those items being virtually little to no impact against the score. And then the whole trended data part, which trended data is like a prediction using machine learning to determine whether, what's the likelihood that that person is going to continue on this path that they're on. So trying to predict the future, whereas FICO is more so using like the past, to determine the risk, right? So that's a big reason there, is that lenders like to use the past as a good indicator as to how to assess the risk, right? A past is a good indicator of what the future performance is going to be. So it kind of ties into my fourth reason, is because while Vantage score treats negative accounts a little bit differently than FICO and is weighted a little bit differently, reason 4 is that Vantage 4.0 specifically is not lender friendly. It is not lender friendly with the items I just mentioned before, plus more. It seems like Vantage 3.0 was helpful, and then 4.0 kind of set them back a little bit, because with 4.0, and remember, Credit Karma uses Vantage 4.0, so it's a real, another reason why lenders hate Credit Karma is because the score model that's being used is 4.0. So with 4.0 using trended data and machine learning, they're trying to use technology as opposed to data. They're trying to use technology to predict what is the likelihood that this consumer is going to default. So for example, let's say that you've had a high balance on a credit card for like 12 months, and you've just been paying the minimum payment. So your FICO score is probably not the greatest, but you got a bonus at work, or you got a raise, or something happened to where you came into some more money and you said, you know, I'm going to pay off my credit cards. So under FICO scoring, your score is going to increase because utilization, which is 30% of your score, is a big deal, and that just really determines your balance to credit limit ratio. So when you pay that down or pay it off, theoretically it'll raise your score a good deal, because you went from like maxed out credit card to virtually, you know, little to no balance. With Vantage 4.0 and trended data, they're not going to really consider that a significant event. They're going to say, okay, that's great, but 12 months have, you know, this person has had, you know, a high balance. They just paid it down, but they've been high balance for quite some time. Let's factor that in, which means that more than likely this could have just been a fluke, which means that let's see that this person have, you know, a low balance for a longer period of time to determine that is the trend going to be, is this person going to be consistently low, or is this person going to, is the trend more like high balance for like 12 months, low for 1, high for 12, and therefore they're still considered risky. So that's kind of trended data from a, you know, 30,000 foot view, and the AI that's used to predict what the consumer is going to do. Again, FICO is using more past history, which in my opinion, and it's, you know, is also probably the opinion of a lot of different lenders, that past history in itself, not adding any kind of, you know, machine learning or any kind of artificial intelligence to do something else to predict and make a decision and, you know, print out a score, but just using the data that has occurred over the past 4, you know, 5, 7 years on this person's credit history and scoring that is a better, to them, to lenders, that's a better indicator of what the risk is going to be. And FICO spitting out that score has been pretty close to what the actual outcome has been on the performance of that loan or line of credit. That's why FICO's been owning this market for quite some time. It's like a household name, been around for a while, been around since the 80s. Score versions are pretty good. Risk has been minimalized. And Vantage is trying to grab market share, but, you know, FICO's been doing a really good job of doing that. So I think with Vantage 4.0, that kind of set Vantage back a little bit. And again, Credit Karma is using Vantage 4.0. So for all the reasons I just mentioned, the score model is different. Experian is not provided. Negative items are scored, you know, differently. All those reasons I just mentioned are all lead up to why lenders hate Credit Karma. They have to explain themselves over and over to people that want to combat them, like, well, my Credit Karma score is this. Why are you telling me this? Or having to educate them the difference between the two. And many of them may not know the difference, right? Many people watching this may not even know that. People watching this could even be lenders and things like that, and they don't really, and this is the first time they're hearing this, right? Because maybe they're not being trained on that properly, whatever the case may be. So that's why there's conflict between loan officers or between lenders and Credit Karma, because, you know, the Credit Karma app has gained a lot of market share in the consumer space, but, you know, the banks, the lenders, they're not using it, right? They're using FICO score. That's where they're at. So that's it for today. That is my time today. That's what I want to share that, you know, with you guys. So hopefully you're a little bit more educated on Credit Karma, Vantage 4.0, lenders using FICO. Hopefully that helps you. And the reason why I wanted to do this is to help you, the individual, you, the consumer, get prepared before you go and apply for a mortgage, before you apply for an auto loan. Get fully prepared and educated so you know what your FICO score is, you know what's on your report. And so before you apply, you pretty much know whether or not you're going to get approved or pre-approved rather, as opposed to just guessing, right? So, you know, my tip is to not solely rely on Credit Karma, but use other platforms, use other sites to get your score, especially when you're getting ready to apply for something major like a house or a car. The one I recommend is myfico.com. They pay me nothing for saying this. I wish they did. myfico.com to be able to get access to all kinds of your different FICO scores, FICO Auto, mortgage, bank card, so you kind of know where you stand on these other score models. And it's a good thing to do before you apply for something major. You know what the FICO scores actually are, so you know whether or not you're going to be able to have a good chance of getting approved. So hope this information was helpful. If you want to learn more about restoring your credit or things you can do, tips and things like that, I do have a website I put up. It's a completely free website, tons of content, good education, videos and things like that. Go to joechavarria.com/links to get access to a couple different offers. You can get credit monitoring set up. You get access to my blogs, my articles, more YouTube videos, more how-to videos, a lot of free content on there. You can even click on a link to schedule a free consultation with one of my team members. They can look at your credit report a little bit more a little bit more close and give you an idea of what you need to do to get your scores going in the right direction. So that's joechavarria.com/links. It'll be in the description or in my bio if you want to check that out. Also, if you like this video, found this video helpful, be sure to like this video, give me a thumbs up, subscribe to my channel, and let me know what you think in the comments below. Happy to take any of your concerns and your questions in the comment section. That's been my time. It's been real, guys. Joe Chavarria. It's been another episode of the Joe Credit Show. I'll see you in the next one. Take care.